Hi everyone. So I am currently in a really nice exotic destination and just doing a little bit of 4x4 driving around before we kind of get back on the camels and kind of head over that way. And so there's a common theme obviously in the videos that I do is trying to dispel myths about these funny ideas that we tend to get in our head. And really one of those is to really, one of the things that we have to do as a trader is we have to learn to not try to imagine what we think the market is going to be doing next, but rather to kind of have faith in the price action. And the idea is that if we trust the price action is really the end result of all the actual reality of the situation. So when we look at price action, we're actually seeing the physical result of the actual orders being executed in the market. Now you also have to understand that the big fish, the whales or the big fish that we feel can move the market really have to participate and trade against other big fish. This is a really big thing that people forget about. The market is so complex and there's so many cogs in place. There's small cogs, we're the small cogs, medium cogs, big cogs. These could be banks or institutions, central banks as well, hedge funds. And really we have to understand that they all have to compete against each other. All right, and this idea that there's this conspiracy all the time is just ridiculous. And so we need to understand that one of the things we have to do in our journey is to shift psychologically to a point where we trust the price action, that the price action is talking to us, that it's communicating to us what it actually wants to do. It doesn't mean that it succeeds in doing that, but it tells us what it wants to do. And what you'll often find, or certainly as I did, is that when I finally let go of listening to everything on Twitter, reading the newspaper, getting this bias in my head about what's going to happen, there's going to be a trade war, or the euro is going to crash, and blah, blah, blah. Basically, after a while, you realize the market actually continues to operate in the way that it does, with slow shifts, slow adjustments, kind of like climate change. It's there, but the shift isn't from day to day. It's just there in the background, kind of accumulating. And so basically, with the markets, we have to learn to trust that price action is really what the market is trying to communicate to us. And we'll find that the more often we do that, the market tends to unfold much more in line with what the price action was saying than when it doesn't. And this is something that fundamental analysts really struggle to understand. They don't understand how it's possible that price action can be relied upon. And actually, it's really straightforward. We live in a world where we have all these random events. Okay, we have all these completely random events. And actually, what happens is we assume that all these random events are just kind of absorbed into the market. One of the things we forget about is that the people in the market don't change. They're the same people tomorrow as they are today. Even though the events are new, they are literally processed, almost like going through a grinder, by those same people. And those people have habits. They did the same thing that made the money. They'll do the same thing that made the money today, or they'll do it tomorrow. Right? So in other words, what they'll do is they make it binary. They basically, whatever information comes in, no matter what it is, they will go, is it good or bad? Am I greedy or fearful? And they will literally convert it into a binary thing. So it'll be yes or no. And so what you'll see is no matter how complex or how new the experience is, the market will force it into something that it can understand, and therefore into something that's familiar. It will attempt to do it because, of course, fear is the alternative to that. And so basically, random events become repeatable events as soon as they are processed into the market. So that's one of the ways in which I want you to think about how the markets process stuff and why these patterns. We are creatures of habit, and in fact, the longer we've been in the business, the more habitual we become, the more we repeat those habits. And those habits reveal themselves, especially in large crowd movements. And that's all we really do as technical traders, is we look for the crowd movements, we're standing back from the crowd, we're watching where the crowd is going, and then we're piggybacking on top of that. And that's how you have to think about it. It's not really that complex. In fact, that's the point. It's kind of a shortcut. You're letting everybody else do all the maths, and you're just watching where they're going and then just piggybacking on top of that. And that's really something that I want you to think about.